Good evening guys, and welcome to today's Technical Tuesday. Now in this video I'm going to be covering how to refine our entries on the smaller time frames and how to actually look for a reaction of certain points of interest and ideally react accordingly. I noticed today some of you said the Euro GBP trade didn't activate. Maybe this could be due to your Pacific spread, broker, etc. or different coordinates on the charts, but regardless, this lesson will cover if the sort of trend does move in a favored direction. We don't enter off FOMO, but we scale into smaller time frames and still wait for an area of interest on a smaller time frame to come to us and then act accordingly. So yeah, let's get on to Euro GBP. Again, I just want to talk heavily about market structure, right? So looking at Euro GBP right now, we are in a previously we were in a bullish trend. So we understood that the majority of buying, the majority of banks' positions were bullish. They were long, indicating that a lot of positions were bought. So we were making, very aggressive higher highs, higher lows, higher highs. Arguably made that higher low as it didn't take out this prior swing low, but we failed to make that new higher high. Now this doesn't mean straight away we are in a downtrend. We have to ideally sweep this low here. But in saying that, we have a sort of minor structural pullback that creates a lower low, lower high, and this is the new lower low that's formed. So now we can ideally wait for a lower high to be formed, and there's two sort of things we can do at this point. We can react upon this level here, try and find an accumulation schematic. What I'm going to cover later on in this video, we can sort of try and find equal highs / equal lows, inefficient pricing, react off that, and then look for longs to form that new lower high. Or we can simply just wait for the lower high to form, wait for it to react at a point of interest of ours and act accordingly. And this is the way limits should be applied. Sorry, not limits. Areas of interest should be applied. Limits is good in the sense if you're busy throughout the day, and let's say you're working halfway or something like that. Limits is a good sort of alternate option. But the thing about limits is once the trade activates, you're in that trade. Whilst if we wait for a reaction of areas of interest and points of interest, we can see accordingly, does it react bearishly? If so, on the smaller time frame, do you have any breaks in market structure, etc.? So let's basically scale into our trade that we took today. So today we took a hedge position on Euro GBP. Again, my initial bias was long, but I did state that we could see a hedge position occurring on a 15-minute time frame if we got the following requirements, which I will break down soon. But just the reasoning on why I had this sort of long entry, the mean threshold of this last down candle before that up move, and this bullish move was quite aggressive in the sense, yes, it was impulsive sort of structure in the sense we had 1, 2, 3 Marubozu candles that were all bullish. But notice we also formed these triple highs here, and ideally raided them with this last down candle before that up move. So I felt this last down candle before that up move needed mitigation, and upon mitigation, we would have been in a sort of discount region in order to look for additional longs. But we have to understand that the overall market sentiment right now is bearish, as sort of this was the last high, and then we've made a new lower low, lower high, lower low, lower high, arguably respecting that lower high here and creating a new lower low as we're part of now. But just scaling into this sort of entry now. Just clean up the charts. So yeah, how we could have capitalized on this on a smaller time frame. So again, this was the setup I had in mind. Again, substructural groups will be created in the Discord about everything I'm going to say in this video. So it is advised obviously to watch it more than once, this video, so you get a sort of more better understanding of the different terms, etc. But I will go into in-depth on each sort of terminology I'm saying in this video. But what we can see here is imbalanced pricing. Imbalanced pricing is not the same as inefficient pricing, and that will be explained upon making these subgroups. But what we see here is imbalanced pricing. Now, upon imbalanced form, we have to rebalance with price. We got that rebalance to the sort of pip, but we didn't actually come to mitigate with this order block, which was a bit weird. But upon rebalancing with price, we ultimately saw that sell-off. Now, there's two things we can do here. We can either sort of let our limit go, or if you're not in the trade, just let it go completely. Or we can go into a smaller time frame and look for very necessary opportunities. So, as mentioned on the bigger time frame, one of the things I was mainly looking at was market structure, and we understood that now institutions are shorting Euro GBP, as there's been a constant momentum towards the downside as we're creating lower lows, lower highs, etc. Now the same thing is present on the smaller time frame. What we see here after this bullish rally that ideally raided those previous highs, I believe it was on a hourly time frame. Just give me 2 seconds. So yeah, what we see here, this was the last higher low. So this was a major sort of swing low in order for me to change my whole bias on the smaller time frames. I noticed we did get that bearish reaction very impulsively as well. Just notice these sort of body closures, very sort of big bodied, and it's indifferent to this sort of price action here, very clustered, small bodied. So this is just sort of attracting the herd in order to go long, build up buy side liquidity, and then ultimately sweep them out by taking out stops that are present below prior swing lows, as there were a lot of stops present below these lows here, as these look like relative equal lows. So upon sweeping out that liquidity, we then had, if I scale into the 3-minute time frame, this was a reaccumulation schematic, but I'm not really going to go into too much detail about that because I haven't really covered Wyckoff to a certain extent, which I do look to cover in an in-depth level very soon. But in saying that, just looking at sort of simple market structure, we had this from this level here. We had that prior higher low. Lower low, lower high. We had that lower high, lower low. Arguably a lower high formed here. Lower low, a lower high, and we had that new lower low. Now notice this here. This is a shift in momentum. This is an indication that price can no longer close below this swing low here, indicating that there is bullish pressure now. Now, what would we like to see if this price action hadn't been formed yet and I saw this sort of scenario partake? What I'd be waiting for is a clear break of this high here, right? I'm in no means to buy sort of Euro GBP right now, and the main two reasons are we are in a bearish trend on the bigger time frame. We have just broken market structure on the smaller time frame, and yeah, that there's no point buying Euro GBP. But what this does is it creates a picture in my head on where Euro GBP is likely to go next. So upon breaking down market structure and me seeing this inefficiency on a bigger time frame, such as 15 minute, as 15 minutes quite a macro time frame compared to the 3 and 1 minute time frames. So yeah, there's something you can backtest. If you go onto the hourly time frame and use that as your daily perspective, and then you go into the 5-minute time frame to refine your sort of entries, etc. There's a plethora of different setups that present itself, etc. But that's for a whole nother video. But this is just refining sort of how we get into the market, etc. Arguably, if you did know the reaccumulation schematic and you had that confluence with that market structure break, we could have gone long upon here. And what we saw present here was a mitigation of this prior sponsor candle, the last down candle, before that impulsive move up that broke this prior lower high here. And upon there, we could have took a small entry. And where would our targets be? This inefficient pricing here. But in saying that, we still let price sort of do its thing. Now, my main sort of area of interest to go short again, there's two, one aggressive entry and one entry that I would sort of favor. The entry I would have favored to get to get into a short would be a break below this low here. So as you can see, if we just look at market structure now, we did create that high, we created that higher low, higher high, higher low, and we've ultimately created that higher high that's now rebalanced with this inefficient pricing here. Sorry, imbalance pricing there. So in perspective of market structure, I would like to see a break below this low. If we just see sort of price play, and so yeah, this is sort of a contraction range. We have that expansion. Upon having that expansion, we did build this sort of triple top here. Now this triple top is a significant sort of area on the smaller time frame. As we know, with triple tops, double tops, or even engineered prior highs, they are going to be liquidated. If we scale into the 1 minute time frame, I believe it was, where did we sort of liquidate price to? This previous up candle before that bearish impulsive move, we had a clear mitigation there. So you could have actually took a short from this sort of entry here. Again, this would be my aggressive sort of short, and stops would just go maybe just a bit above that sort of wick there. Why didn't I use this candle? Again, we did have a sort of mitigation, and there's not really that there was no gap present, meaning there was no imbalanced price range, etc. So the momentum wasn't really strong with that candle. But again, we saw a very aggressive bullish run up to fill in this imbalance here. As you can see, we had that gap in price, rebalance with it, and saw that sell off. So again, that was an area of interest of mine. And then ultimately we have broken that sort of low, that prior low as mentioned. Just get out the brush tool. So yeah, we've broken this prior low here, and now sort of sparks my interest. Why? Because in breaking this prior low here, what we actually formed was engineered lows, meaning a double bottom, encouraging retail to sort of buy this up. People looked at this as a double top to sell, have been stopped out now. Sort of both parties of the market have been taken out. And I know from a bigger time frame, the overall institutional order flow is bearish. And now we sort of scale back into a sort of 3 minute time frame to get an overall structural point on where it is priced. So again, the 3 minute time frame is a bit more clearer in the sense that now we can understand that relative equal lows were formed here, and now have been swept with that wick, and due to this sort of small manipulation, similar to what we saw here about how we liquidated these prior lows here, how we broke market structure, took stop losses from here and used those stop losses to then see higher prices in order to mitigate slash rebalance with this imbalanced pricing. We can see the same thing present here. So again, we've had that liquidation of those prior lows there. Again, liquidity has been built up from the bank's algorithm perspective, and we've seen a mitigation of that candle. We've seen a mitigation of that candle. So this prior price action is no more valid for me. The next area of interest I'll be looking is these last three bullish candles. So we see 1, 2, 3. Again, yes, they are dojis, but you know, they have not been mitigated with. Upon a mitigation, we see it to the wick, and then ever since then we've seen lower prices on Euro GBP, which I'm personally still holding. Where am I holding to is a good question in itself. Just looking at sort of what we saw on a smaller time frame, on a bigger time frame now, you know, this sort of did look like a swing low that needed to be taken out, a swing low that needed to be liquidated, a swing low that needed to be liquidated. Upon a liquidation now, do we reverse? Maybe for a retracement, but overall I still think the overall structural point on Euro GBP is bearish. My next area of interest, I've got two areas of interest that we could react off. The first being this point here, just scaling into this sort of region here, and just so what we can see present here is, again, we have a lot of sell side liquidity present below these engineered lows. So again, we could consider this as a double bottom or even a triple bottom, or from a retail perspective, this is a pattern called a head and shoulders. So we see that left shoulder, head, right shoulder, and again, a lot of stops will be present below this sort of area here. In addition to that, we have this last down candle before that bullish impulsive move that ideally took out this swing high here, this swing high, and this swing high in order to mitigate with a sort of candle here to see lower prices, and what was the main sort of objective for this lower bearish move to rebalance with this inefficient price in here. So this is one of my areas of interest, a mitigation of 5-minute candle, the 5-minute candle, I believe. So this was the last down candle before that impulsive move up. So yeah, that's one of my main areas of interest for us to go long. And the reason I've sort of favoring a long bias still is because if we look at the 4-hour time frame, we can see all this prior sort of swing highs here, swing highs here, swing highs here. Again, those are just sort of liquidity points for myself, and even if we look at this high here, it's just sort of got no use anymore, and they're just in a way liquidation sort of areas. In addition to that, we do have, you know, this sort of double top here, also can be considered as a major liquidity pool that needs to be swept. So upon catching that, again, it's one thing trading a continuation, another thing looking for reversals. Yes, reversals are dangerous in the sense that they're very hard to catch, etc. But that's why hedging was put in place, so we could capitalize on both the longs and shorts and profit accordingly. So now when I do look for my longs, I'll be risking 1% on my long. But initially, if I get stopped out on that long, I'd only lose 0.5% of my capital because I've still got the short running, if that makes sense. So yeah, I'll do a separate video on hedging as well. But the second area of interest is this wick here. Sorry, not this wick, this candle here. The reason I say it's this candle here is because it's done three things from what I can see. Firstly, it's mitigated with this prior manipulation, and the reason I call that manipulation is because we had a sweep of this prior low here. Upon a sweep, we had on a bigger time frame, or even on this time frame, a real failure, body failure to close above, and you can see from the sort of bullish reaction, this was in fact a raid, not necessarily a trend continuation. Upon that raid, we've had that mitigation of that manipulation. In doing so, we've taken out this sell side liquidity here, so we've raided that, and we haven't really had a proper mitigation of this candle here. So I'd be awaiting for price to come to this area here. This would actually be one I'm favoring for a limit bias, and the reason I say that is because sometimes price might just wick to an area and reverse straight away. There's not enough time to act accordingly, etc. And I feel this is going to be one of those scenarios where there's sort of sell side liquidity, this prior engineered swing low is above, so that's liquidity present. There's a sponsor candle to be mitigated with, and in addition to that, we've had a prior manipulation that's mitigated with. So that's my area of interest. That's my confluence on Euro GBP, the next move. But apart from that, I'm still holding even throughout retracements, etc. And yeah, that's just a little bit on how to sort of refine our entries on smaller time frames and how to capitalize if a trade goes one way, even though it hasn't activated a limit or you know, reacted properly of a area of interest. In saying that, we want to see price you know, fulfill our area of interest, in the sense that if this whole block was our area of interest, you know, I would ideally refine it as soon as we get into that area of interest and see what price is doing. In addition to that, are we making sort of relative equal lows and have a contraction range? Okay, this is a good sign, because now I can wait for that manipulation. Do I react here? No, because how do I know it's not just going to be a higher high and a continuation of trend? What I do is wait for a sort of maybe a sponsor candle form there. Let me just move this out of the way. And then I'd wait for a break in market structure. Upon then, I can wait for a new lower high to be formed and act accordingly, and then swing it down. So yeah, that's just a little bit about getting into smaller time frames, understanding what we look for, and yeah, I hope you enjoyed that video, and more importantly, I hope you have a good night. Thank you.